$10,180. That is how much money I have made this week as a day trader, and I'm going to request this payout right in front of you. Now, to make $10,000 per week as a day trader, I only use one strategy, and it has 3 simple steps. And in this video, I'm going to show you exactly how I did this, the entire strategy from start to finish. But before I get into it, there's one main thing that I look for before I ever think about entering a trade, and most traders do the complete opposite of what I'm going to show you today. So today I'm going to show you exactly what that is, and if you're getting this wrong, then this is most likely why you keep getting stopped out using price action strategies. So before I take literally any trade at all, I just need to know what price is actually doing. Are we actually moving up? Is price going down, or are we just chopping inside of a range and doing nothing for the day? That is pretty much the only question that I'm asking myself. Higher highs and higher lows, right? It's very, very simple. As we're going up, we need to be creating new highs that are higher than the previous. And as we're coming up, we should also be creating lows because that's the natural way that the market moves. And we should be having lows that are higher than the previous low. This will establish an upside trend. A bearish trend, again, very, very simple. We're going to be having lower highs. We're making new highs, but they are lower than they were previously. And we should be seeing new lows as well. So throughout this trend, we should continue seeing that exact same pattern over and over again. If we break that pattern, well, then we are most likely going to be flipping to the other side of trend. So for my strategy, if you can't look at your chart and tell me in 2 seconds which one it actually is, if it's an upside or downside trend, then you don't have a trade, right? You have to close your charts and literally come back later. And in terms of actually finding the trend, I usually go to a higher time frame, such as the 1 hour. And the easiest way to find overall direction in the market is on these higher time frames. Take a look here. We can see that we are very, very smoothly moving to the downside here. On the other time frames, such as 5 minute, 2 minute, you're going to see a lot of choppy periods in between it that'll make you think that there is no trend in the market. Or you will see some upside moves like this that make you think that there's an upside trend in the market when there really isn't. So if the higher time frame is so bearish and we are trying to long on the 5 minute, right, inside of this little area here, this is pretty much trading against every single part of the trend, and you're going to get destroyed every single time. So if you have trouble finding the trend, one thing that you can do is add a moving average exponential here. So if you add that moving average and you go over to the settings of that EMA, you can change this length to 200. This will help you find the trend a little bit easier because whenever you look at the chart, anything below this EMA is going to be considered downtrend. Anything above the EMA is going to be considered uptrend. So in this area here, we are very clearly trending to the upside. Now, don't rely on this, but if you need help finding the trend, this is a very, very good tool that you can use. So now you know the trend. That's great, but here's the thing, and this is where most traders stop, and it's exactly why they keep losing money. Knowing the trend is not enough, not even close, and I'm gonna show you exactly why right now. Step 2 is the failure. This is my favorite part of the entire strategy, and honestly, it's the part that most people don't talk about. So here's what's actually happening in the market. Price doesn't just go up or down in a straight line, right? It trends in one direction, and it pulls back against the trend. It tries to reverse over and over again. These failures that happen right here whenever we're looking to see if we're going to continue in the same trend or not, that's my signal to actually hop into a position. So what I'm looking for in an uptrending position is going to be a move where we are showing very, very clear trend, and we have green candle, and then a failure to continue to that same direction. When we fail to make that new high and we start to push to the downside here, this is my failure. Here's why this matters. Most traders are on the wrong side of the move for one of 2 reasons. The first is going to be that they enter as soon as they see the highs get broken here. So for example, I'm going to do the thing that all the haters hate now, which is going to be replay trading. That way I can show you exactly what's actually happening in the market. But most traders, they just go long as soon as they see a high get broken, right? And it doesn't make any sense because the moment that they see that high get broken, they end up getting stopped out. And the second reason why most traders fail while trying to use a breakout strategy is they try to make the breakout on this high right here. But these traders forget one thing. They forget that your stop loss, if you end up entering a position like this, has to be extremely large. And that's why I like to enter at the absolute best price possible. Now, my strategy, whenever we actually take a look at my price action entries, they have a higher risk to reward ratio than all of these other strategies that exist in the market. And the reason why is because we are entering at potential new highs. And this takes us to the third step. We know that we have the trend, we've got the failure, and now the part that actually puts money into your bank account, you have to pay close attention here because this one's actually like a very specific detail. And this is what separates the traders who make money with this from the ones who actually just watch the video and they can't execute it. And if you're still following with me right now, you already understand this better than probably 90% of traders. Step 3 is the continuation. And I need to be really clear about this because this is where most people blow it, right? After I see a fail candle, I don't enter just yet. I have to wait for confirmation. What I need to see is going to be the very next candle breaking this previous candle high, and our stop losses are always going to go on the other side of that signal candle that you're seeing there. So what we'll look for is this next candle coming up and potentially breaking that high. If we don't get that high break on the next candle, we just move our entry to the next candle over. So now we are looking for this high break. And remember, your stop losses get updated along the way. So our stop loss is no longer below this candle. That doesn't make any sense anymore. We're going to put our stop losses below the signal candle. And what we look for is highs to get broken. Now, I know what you're thinking. Sean, why don't you just wait for the candle to close, right? Isn't that safer? No, and here's why. If I wait for the close, right, my stop loss has to go way down here below this candle low. I'm giving up more than half the move before I ever get in. But if I enter on the break of this candle high instead, my stop loss has to go on the previous candle low. So I'm making almost double the amount of money with half the risk by entering earlier in the move. This is literally the difference between a 2.5 to 1 trade and a 1 to 1 trade. It's the same setup, the same chart, but it's completely different results based on the one decision that you made. And once you have that break in previous candle highs, you let the trade run from there. And as you can see, we fly straight to TP with pretty much no issues whatsoever on this position. Make sure that you target the next significant levels, whether that be order blocks, EMAs, VY, it doesn't matter what it is, just make sure that you are targeting a significant level on the chart. So trend, failure, continue. That is the entry model. All right, so let me show you this one more time on a completely different trade this week because I want you to see that this isn't just a one-time thing, right? This is the same setup literally every single time over and over. So first thing, what is the trend doing? As you can see on a very macro perspective, we have a downside trend. Now, the reason why we have a downside trend, if we get a little bit closer, is you can see that we are creating new lower highs over and over again. But we have this area here that is very interesting because we are not making a lower high here. But what ends up happening is we fail the lower high, which gives us an indication that we are most likely going to continue in trend. So this is a really strong concept. The next thing that we'd want to look for is a failure. So right there, we end up seeing that candle go against the trend. All we look for now is the continuation. We have ourselves our failure candle right here. So all we need to do is enter as soon as we break this previous candle low with a stop loss above the previous candle high. And of course, we want to target the next level of liquidity down, whether that be order blocks, key levels, whatever it is that you're using. And we let the trade run from there. And as you can see, what happens here is we end up breaking this low with zero drawdown. We don't have our stop losses hit whatsoever. And we end up flying as far as we possibly can. I want to see if we end up hitting target here. There we go, straight to target. We have very little resistance in the market, and the moment we hit this target, we end up flying straight off of it. This means that our target of liquidity was a great place to target. 4-to-1 risk to reward trade. All we did was use the exact same TFC concept over and over again. So look, I just showed you the entire strategy. Trend, fail, continue. The same exact thing that made me over $10,000 this week trading. And I know a lot of you are going to go back to your charts right now and start finding setups that looked exactly like what I showed you. But here's what nobody tells you. The TFC alone isn't the only thing that I'm using. I'm throwing a couple of different things in the mix. That way we can make the TFC even stronger. Because at the end of the day, the TFC system is just an entry model. But if we do something like add fibs to our positions, you can see that we end up having ourselves a move that is very, very clear. A reject off of the golden pocket and a continuation through with a TFC. That is how we increase the win rate of this entry model. And of course, guys, another thing, knowing what to do and actually executing it when you're sitting there in a live trade with real money on the line, those are two completely different things. I have worked with over 500 traders one-on-one. Every single one of them already came in. They knew a strategy already, right? They'd watched videos, they'd understand the concepts, but they were still blowing their accounts. It's not because the strategy didn't work, right? Because when you're in a trade and it's going against you, everything goes out the window. You move your stop, you exit early, you size up after a green day, and you give it all back. And then honestly, you're back to square one. That is the exact thing that the SOA mentorship fixes. It's not a secret strategy, right? You literally just watch the entire strategy, but the difference is you're gonna have me in your ear every single day, telling you to wait for the break, telling you to size down after a loss, telling you to close your laptop after 2 red trades. These are things that you don't have now. And like I said, I've done this with over 500 people. The ones that go through the one-on-ones, they don't just learn the strategy, right? They actually execute it consistently, and that's the difference. So if that sounds like you and you finally want to get results within your trading, then first link in the description, fill out the application to join SOA. I only take 10 people per month. I'm not just saying that because take a look at the amount of people that I have to work with. I can't take on 5,000 students. So if you're serious, it's first come, first serve. Go to the first link in the description if you're interested. And if you want to see more on how I use key levels and Fibonacci on top of this to filter out the bad setups and I only take the highest possibility trades, that's something that most traders completely miss. And I break it all down in this video right here.